Evening traders. We have a new sort of setup here, so it's not fully fixed up yet, the house, but soon enough it will be. And got my CNBC working in the background, so I'm very happy about that. I'm only running off one screen here in the kitchen, but soon enough I'll have everything set up. Now it's been a while since I've streamed because I was away in Singapore for work. I had to meet some clients and do a little bit of education over there. But you know what I really want to take away from, just let me check if that's working. Looks pretty good. Is, you know, there was a lot of volatility last week, and the volatility was of the kind which is quite dangerous. The market turned on Trump because of a few little events that happened, and although there was a brief recovery in the dollar yen in particular, second here. Let me actually just want to talk. Because there was a few little events there that led to the market turning on Trump, mainly because of the way he dealt with the Charlottesville sort of race situation there, the protests, and he didn't really condemn the white extremists quick enough. What happened there was that the market, you saw a lot of the business leaders sort of opt out. So he disbanded his a few councils that he had, presidential councils, and this led to sort of the market starting to price out his ability. He also went after some of the Republican establishment. This led to the market pricing out some of his ability to get his infrastructure and tax policy plans through. Now there was a slight recovery on Friday after he fired Bannon, who was seen as a bit of a right-wing inside his element, right? But in terms of the market still being fragile here and to the downside, that's definitely the case, and you can see that in the dollar yens being gently sold off during the Asian session, and so far in the US session, European session. And it wouldn't surprise me at all if we get more risk off here. Stocks have not really recovered once Bannon was fired, and it's been a while since we had a pullback, and this story here that Trump has lost the ability, and his agenda has been derailed is a very real story, and a story which could definitely hurt the US dollar and hurt stocks. Now, the main way I want to play it is long euro. I am short at the moment the dollar yen. Make sure it's coming through okay, boys. Main way I want to play is to go through on the long euro. Now, the reason why I like long euro is you don't really require US dollar weakness to come from risk off. You can get that just from anticipation of this Jackson Hole speech on Friday. Jackson Hole's a meeting of all the well, usually a meeting of all the global central bankers, and you see some very big policy announcements done at Jackson Hole, and it's a very, timing wise, it's very optimal for Draghi to announce the taper plan, or how they're going to actually go about it. I mean, that's dangerous in a sense because it could be less than the market's looking for, okay, but generally it's a one-way street here. It's a one-way street. I mean, the ECB's coming out of ultra easy monetary policy, and it's going to be very hard for them to do that in a way which is ultra dovish. It might be a bit more dovish than the market expected, but that should just provide another buying opportunity here. So I'm short dollar yen because I think that risk is going to be off, and I'm not too worried about it getting back above 110, say. Long euro, really should have been long euro earlier than this, but the market's been finding very solid support at 117 last week, and it looks like it's consolidated enough, and the next move will be to the top side as the ECB begins that taper, or the market speculation builds for September, where you're going to see some very probably market's going to test 120 in my opinion before the ECB announcement in September, and that's the sort of the easy money that I look for, and it seems about time. It's been very well supported, consolidated, and now is it's got that US dollar opening as well from Trump. So you don't need Trump alone. It works without Trump, but it would help as well. If there's stock market sell-off, euro should go higher. If there's North Korean problems, euro should go higher. It's out of it's outside of the geographic area as well. And if the market wants to play a new theme of Trump's agenda being derailed, then definitely euro goes higher. And so it doesn't need the ECB, but the ECB is a good enough reason alone to be long the euro. And so I don't mind that at all as a trade this week. Dollar yen, I'm pretty flexible on the target here. I really want to see how the stock market goes. I might be actually closing this out if stocks hold up and just be remaining long euro. Now euro yen is a combination of both, and it's under pressure, so I'm not really long euro yen unless sentiment really changes positive. So risk is off, and in this scenario you don't go long dollar yen, you don't go long euro yen, you don't go long any yen cross. Even though the market's at really nice levels here, it's too dangerous. And if we break down the dollar yen, if it breaks 108, has a huge amount of downside potential here, down to 105, even 100 if risk off gets negative enough, and that's pretty bearish sort of candles, and just the story there makes sense that we are going lower. So I like that play, but I like the euro as a bit of a safer play because we don't need the stock market to sell off for the euro to work. Just need the ECB to be a little bit talking about the tapering program, and the market will start to rally ahead of the ECB's main announcement. It won't happen on Friday; it'll happen next ECB meeting. And so the September meeting's always been a big meeting, and that's why I like to play it now. The iron ore is very strong. Sentiment towards China is pretty strong. So the Aussie's doing quite well. Oil's rallied, so dollar CAD's doing quite well. So dollar CAD, we were talking before I went overseas about getting into selling this rally. Now I was looking for 128, 128.50. I was really keen to sell up here, but I missed the entry. And so big sell-off as the Bank of Canada's gone hawkish, raised rates, maybe raise rates again soon. Had a nice little retracement, but it failed towards the levels that I was looking for, a little bit higher, maybe a little bit more US dollar strength, but that's been derailed because it was pretty unpredictable, the Trump sagas that started on Wednesday, Thursday, and Friday, and so that's sort of accelerated the reversal in the dollar CAD selling. So this is didn't get to the levels I wanted to sell at, but you definitely could have sold that. If I was trading, I probably would have got a bit of that because it was a preferred way of showing US dollar weakness. In terms of the Aussie though, very similar in the sense of it had a big pullback from 80.70 I believe, and it actually broke that 78.50. It was looking pretty like we might be going down to 77.50. It's found support though, and with the nice rally in iron ore, about 6% today, and also the US dollar being quite weak, I definitely don't mind the long euro, the long Aussie as well. But this will be, any North Korean news probably derail this one, and any sort of heavy selling in stock market might derail the commodity currencies as well. So it's not as clean as a straight euro. If you're looking for something apart from straight euro, then long pound, as it's consolidated, hasn't really resumed its uptrend. Now it's got its own Brexit issues, but if there's going to be a weakness in the US dollar, it's going to be very hard for the pound not to rally, especially if the euro is going to say 120. That would put the pound back at 132 quite comfortably. And there's not really huge headlines or huge focus on Brexit, so the market can definitely ignore it again for a little while and just continue to buy the pound on dips against the weak US dollar. So that's in the case as well. Probably not as safe as long euro, mainly because of a pound yen, and if there's a big sell-off in stocks, pound yen moves aggressively, that can drag on the pound itself. So we're looking at closely today at the US stock market and how it performs. If there's another leg lower in US stocks, I think that we're going to be setting up for a test of 108 this week on the dollar yen. and with the ECB and Jackson Hole's speech from Draghi, and it's getting closer, and the market performing well on dips here, I think the euro will probably be at fresh highs above 118, towards 119, maybe even towards 120 if the right things are set on Friday. And so I'm trying to get long in anticipation of that. Hopefully we get that volatility and we're not just sideways trading again for another week, which could happen. But I think if you keep the bias with the general trends here, I can't really see a story where the US dollar snaps back. There's not really much US data. It'd have to be Yellen come out much more hawkish, talking about rate hikes on Friday, get the market focused on that again. That's possible. That's very possible. But we want to be open to, before then, stock market selling off, and so that's why I'm short dollar yen and long euro. But I'm flexible for sure at these levels. I mean, you don't want to be ultra aggressive short dollar yen underneath 110 ever. Things could snap back to reality, not reality, to pro US dollar pretty quickly, or a lot less aggressive negative US dollar. Stop loss for US for the euro. I mean, I want to buy more if it goes down. I'm a bit worried if it breaks, say, 116.80, but not even that worried really. I mean, it's the world in which it goes below 115 is a pretty crazy sort of scenario where that happens. I think it's already proven its strength here. So if it does go below 117 again, though, that would be the concern I have. I'll probably buy a little bit more at 117, and if it breaks 116, say 50, I'll start to watch it a bit closely. But just broadly, I'm not really worried about it going down. I think that still over time, especially as we go towards the ECB meeting in September, there's going to be buying. So I can afford here. Obviously, like if you're looking for hard stops, and if we somehow break 115, I'll be out of that sort of straight trade. I'm not going to risk a huge amount, but if the worst case scenario break 115, then I have to reevaluate the whole medium-term trade. So yeah, I mean, I'm going to have the whole setup here for the computer soon. It's going to be nice. I'm happy to be back in trading, and I've got ultra fast internet now, so everything's really good in that regards. I've got the CNBC, and so I'm really happy about the setup now. I'm going to probably do a bit more trading than I have been doing lately as well. So it's going to be an interesting week. I think this is a very pivotal week for the market. The pullback, all the pullbacks have failed. Yeah, in the last, since Trump got into power, every pullback's failed. So if this turns into something bigger, that'll be the first time. And dollar yen's already at levels that something big's problems happen. You could be down at 21,000 and dollar yen be at 109, and that'd be more sensible, given the relationship between the Trump trade and dollar yen's rally. But stocks have been very sticky, and the market's been very reluctant to sell. So, and they've recovered every time, so it's really hard to be ultra aggressive, but this definitely is a negative sort of price action last week. And so if it continues, it wouldn't be a surprise if we do get a bit more follow through. I'm not calling for the top end stocks, but I'm very open to a correction here. And that will just provide us with a lot more volatility, and provide us with a lot more entries into some of those longer term trades that we like as well, like long euro yen. If you get down towards 125, makes sense. Japan's not doing nothing anytime soon, so as long as there's stability after the sell that comes through on the stocks, if there's a bit of stability in the euro yen's low enough, then it's going to be really nice buying. It might be at 125, might be even lower, 122, 123. It will get there quite easily actually if there was a 1,000-point drop in the Dow. But after that, you can easily see the market going back to 130 if things stabilize. And the market focuses on the euro story rather than the stock stops selling off. Which is very possible after the sell-off, or they start to snap back into a rally again. In fact, I think you should be thinking about that as a very strong possibility after any selling on stocks to be buying the dip. The Teflon Don has been able to get past anything, so he's very reactive as well. It seems like he fire anyone to do sort of. He's very sensitive to criticism. So perhaps there will be a way forward for his agenda as well, if he makes the right sort of compromises and sacrifices for his team. Maybe even somehow reunites with the Republican leadership. That would be a really positive story if something like that happened. Right? In the short term, we've got some negativity regarding his agenda. A lot of that is to do with his inability to get things passed. So if somehow he makes enough changes that it changes, your chat's gone, Norbert. I'm not sure, mate. I'm not sure. You're talking to me in chat, though. If something changes in terms of the Trump agenda, that's really big moves in dollar yen. That's how the dollar yen will rally. And especially if the Fed looks like they're on track to raise in December, there is ways in which euro yen, dollar yen, the euro rallies, dollar yen rallies, and euro yen goes berserk. Okay, but in the short term, we have to watch the stock market and watch what's happening here. We could be in the midst of a pullback and risk-off phase. And like I said, long euro is much safer than long Aussie, but both should do quite well. It's, long euro is safer than the pound as well because of the Brexit headlines risks. But volatility is what we want. So we want this actually to happen. We want a stock market correction just to get us much better levels in terms of where we can buy euro yen, dollar yen when things settle down. So yeah, let's have a look at some of the market research out there. Let me to get rid of the video here. So Jackson Hole, a lot of traders asked me about that today. I sent out a little bit of research regarding it. So Jackson Hole, I think QE2 was announced in Jackson Hole, US QE. A few other, maybe I think QE Twist was announced as well. So it's definitely a place where you can get big announcements. You also have the one in Europe that was not that long ago, where the Draghi came across very hawkish. I think Draghi is going to be very cognizant of that and not be too negative. Sorry, not be too upbeat. Because if he is, then you would expect him to come across balanced maybe at this meeting. So sorry, at this event. And maybe let the ECB itself in September be the big event. But there was rumors, Wall Street Journal was posting an article regarding how it's going to be a big announcement from Draghi. That's probably just speculation though, from financial journalists who are trying to get a little bit of reading clickbait. So it's a diminishing risk event after Bernanke. Bernanke used it maybe more than anyone else. In terms of who's speaking, Yellen speaking, giving the keynote address. Draghi's also going to be speaking, Broadbent's attending, but not speaking. Fostering a dynamic global economy, blah, 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 constant change. We don't expect Yellen to focus on the economy and immediate outlook for monetary policy, okay? But they will be focusing on any inflation sort of talk, right? Inflation talk is really big. And you got to look at the December rate hike chances. Alright, it was 2014 when ECB Draghi used his appearance at Jackson Hole to warn inflation expectation in the Eurozone deteriorating quickly. He will focus on the economist theme and unlikely to deliver a fresh policy message. Okay, so maybe there won't be a big event on Friday. Doesn't stop the market rallying in anticipation or potential. Yeah, QE2, QE3. Risk tend to trade well. Alright, we'll see. It's a pretty in-depth little rant, the little article here. Alright, Alright, so Barclays week for the week ahead. We think the risk for the euro around the event is biased to the downside. I think the euro bulls might be disappointed by the lack of meaningful hints. Okay. I mean, I'm long before the speech. I'm hoping that we're going to be above 118 from either Trump-based US dollar selling and stock market selling as well. I mean, the short-term price action today has been quite solid, so I don't think that's a crazy idea. In terms of disappointment and the market selling off afterwards, that's definitely possible. Definitely possible. But I don't think it's going to go crazy, right? I mean, I don't think it's going to go below 116 or 116.50 on the back of disappointment when there's still the, what's the disappointment? Disappointment is where he doesn't speak about anything. It's not like he's, the people's going to change their mind on ECB tapering coming. If he doesn't talk about it, he just basically delayed it again. They're looking for US dollar euro weakness in general. Okay. Maybe with Yellen there is a bit of US dollar upside risk. I mean, there's not much US dollar downside risk with Yellen. If she talks about inflation, it's not a surprise. She'd have to be even more dovish about inflation than she has been. They share the view that Euro USD is likely overshot and expect monetary policy divergence to remain important for tactical retracement. Okay. Jesus, looking for 112.30. Okay, you bears, settle down. Break 116 first, right? Then we can talk. We'll talk about if it breaks back below those May 2016 highs, then we can talk about being a little less bullish on the euro. I suspect 120 is coming and 125 by the end of the year, but could be wrong. I mean, I was very bullish back in 108 too, so I mean, there's reasons to remain with the trends. They're calling for something to change. That's generally a lot harder than things to stay the same, and the market looking for more US dollar weakness. I think the chances of Trump giving more US dollar weakness is higher than lower, unless he completely changes his style. Alright, so you're talking about selling euro, and now you're talking about US dollar losing confidence. Okay, keep everything in line, guys. Luckily, keep weighing on the USD. So why are you selling euro USD? Right? I mean, sell euro yen. That would be the trade of what they're talking about here. And they don't think that drug is going to disappoint. Range bound for the pound. Global themes driving dollar yen. So that's just risk on, risk off. Trump stories. They're bearish on the Aussie dollar as well. I mean, Jesus, these guys are really counter trend. Iron ore just rallied another 6% today. Iron ore rally is vulnerable, they say. Okay, well, if it turns, then we can turn, right? We don't turn before it turns. It might give you 83 cents before it turns, right? I've only got one screen, guys, so that's why you can see everything on the one. Alright, so political wranglings dominated last week, but Jackson Hole should provide a focus beyond Trump this week. Despite Draghi watering down expectations, any sense of optimism. Yeah, so he doesn't even have to talk about tapering, he just has to talk about an upbeat ECB like he did last time, an upbeat Eurozone economy and outlook, then the market will go a bit crazy. And we expect Yellen to keep December optionality. Optionality is a word that we use a little bit for Fed, especially lately, in the terms of how they keep the option alive for them to raise rates. Even if they don't have an intention to raise rates, they'll still keep the option alive, sort of just in case data turns a little bit more positive. And so that is something that we've seen develop a little bit especially this year. They've actually raised it. The timeline of their raising this year has been a little bit different to the market's expectations, and they've sort of changed the market expectation very sharply with some series of Fed speak. Alright, they're looking for, this is Deutsche Bank looking for Eurozone consolidation, but resume its uptrend towards the end of summer. Hard to see sustained extension above 80 cents with so much geopolitical uncertainty. Yeah, I mean Korea stuff, right? You got North Korea and South Korea, sorry, in America doing some military tests, military joint exercises this week. So that could cause a little bit of concern. Already we've seen a bit of talk about that from Kim, saying he wasn't happy. Alright, so just to make it a bit cleaner for you guys, because I don't want you guys to trade without stops. Short term, we're looking for the market to be pretty strong in the euro. It would be surprising if we got even below today's low. Okay, so for me, you can put your stop just there, then reevaluate if the market does have another little test towards that 117 level. In terms of dollar yen here, I'm going to keep my stop at entry. If it rallies, must be stocks doing well. Otherwise, I'm just going to see how it plays out. I think we can move towards 108 later this week. But yeah, the euro, I mean, you can just put your stop underneath the lows of the day and then reevaluate if it goes down somehow. Have to be some fresh comments that are pro Trump. I suppose that could definitely happen. A lot of swinging in the market sentiment in the last 3 days. Gold, look, gold is very similar to short dollar yen, so gold should go higher. Gold should be well supported. Now it failed at 1300 noticeably, caught the market a little bit on the wrong side of the foot, but it's been finding support throughout all of Asia, and you know, won't survive a second test of 1300 if we get above it. So you can think of 1300, you might need dollar yen to break 108, you might need stocks to start their second leg of selling this week, and then gold can easily break 1300. This was all just a little bit too fast, too quick, and the market was caught long. But I don't think the trend has changed. Unless stocks can stabilize and resume the uptrend, then gold will have a very hard time breaking 1300. But if stocks take another leg lower, breaking 1300 opens up a huge amount of upside as well. So this 1300 has been tested a few times. Now, this is not a great little rejection candle, but it's if we get back above it, it'll look even stronger. So you know, mid 1300s is definitely possible on the break of 1300. And I'm much more in the camp of it going higher than lower at the moment, anyway. But things can change pretty quickly. Alright guys, I'm going to be back tomorrow. Hopefully we've got the desk. Otherwise we'll do another standing one. Standing is not too bad actually for trading and just generally working as well at a computer desk, but it's definitely not ideal for me if you're going to spend hours. So I like the new screen here actually. It's very fresh, very clean. You can see you can navigate to forex the signals here, and you know, you can get your forex TV here, get your trading contests. So it's a bit more cleaner. Trading Academy as well. So if you have any questions or you want me to look at a particular pair, just send me a PM and I will try to do that tomorrow. But yeah, otherwise just keep an eye on the US stocks tonight, see if there's going to be a bit more risk off, and try to take advantage of that. Alright, trade safe guys, I'll be back tomorrow.